This video is to go through 11.3, accounting for the declaration and payment of a dividend. We have two objectives. You need to be able to explain the relationship between retained earnings and dividends and account for the declaration and payment of dividends. So here they're showing us stockholders' equity accounts used by a corporation. So this is our stockholders' equity section on the chart of accounts. So we can see that these are the 3,000 accounts. We have capital stock, paid-in capital in excess of par, retained earnings, dividends, and income summary. This section on our chart of accounts is going to take place of our owner's equity section. Here we have a couple of terms. Retained earnings is an amount earned by a corporation and not yet distributed to the stockholders. Dividends are earnings that have been distributed to stockholders. Board of directors is a group of persons elected by the stockholders to govern a corporation. Declaring a dividend is just the action taken by the board of directors to distribute corporate earnings to stockholders. So here's what it looks like. On December 15th, 3 Green's Board of Directors declared a quarterly dividend of 5 cents per share. Capital stock issued is 75,000 shares. Total dividend is 3,750. Date of payment is January 15th, memorandum number 43. Here's what we're going to do to put that transaction into our journal. We are going to debit our dividends and we are going to credit our dividends payable. So this will go into our general journal and it simply will start with our date. We're going to debit our dividends. We have our memorandum number and then we have our credit to our dividends payable. This account is a liability because we've just declared the dividend, or the corporation has declared the dividend. We have not actually paid out that dividend. Here we see that we are going to pay those dividends. So January 15th, it says that paid cash for quarterly dividend declared column. So here they're showing us all of the dividends declared, or the dividends payable and then paid out. So you'll notice here, this is saying that they were declared, so 3/15, and then they were paid on 4/15. Okay, so here they were declared on 6/15, paid on 7/15, declared on 9/15, paid 10/15, and declared 12/15 and paid on 1/15. So we're increasing that liability with a credit, and then we would decrease that liability with a debit because we're paying them. When we pay cash, we're going to credit our cash. So this would go into our cash payments journal because we are paying cash. We're going to start with our date. We have a debit to our dividends payable, check number 742. We don't put that C in there because it's already labeled as check number at the top. And then we're going to credit cash. Number 1, under what major chart of accounts division are the owner's equity accounts for a corporation normally listed? So this would be our stockholders' equity. Number 2, why is only one account maintained for the investment of all owners of a corporation? So in this case, a lot of corporations are going to have lots and lots of stockholders. So it's just not practical for a corporation to have separate owner's equity for every single stockholder. Now, when we're looking at a sole proprietorship or a partnership where we have 1, 2, 3 owners, that's more realistic for us to have a separate owner's equity account for each of those owners, but not practical with lots and lots and lots of stockholders. Number 3, which account does a corporation use to record earnings not yet distributed to stockholders? This is where we would use retained earnings. Number 4, how and when do net income and dividends impact permanent stockholders' equity accounts. At the end of the fiscal period, our temporary accounts are going to be closed into our retained earnings. Net income, if we make a net income, that's going to increase our retained earnings. Dividends is going to end up reducing our retained earnings because we're paying out those dividends. Number 5, what action is required before a corporation can distribute income to its stockholders? This is where the board of directors must declare a dividend. That declaring of a dividend is that action of then distributing the income. Okay, so we are done with 11.3. You can now do the work together.